Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday, as we saw a little drop in the markets, followed by a pretty big rally. So we'll cover a lot of that today, as we are setting in on on looking at some closing in on the all-time high of the S&P, although the Nasdaq not showing the same amount of strength. And that momentum that we had talked about yesterday definitely still has some waning, but we are bullish until the market tells us not to be. So let's keep that in mind. If you're new to the channel, make sure that you hit that thumbs up button down there. That means that you like it, and that you hit the notification and the subscription setting so you become a subscriber. If you're a regular returning visitor, do me a favor, make sure that you leave a comment down below. Tomorrow, real quick announcement, tomorrow morning, 7 a.m. Central, set your clocks, set your watch, get your popcorn ready. We're going to do our live daily market commentary. So looking forward to having you join me tomorrow morning for our live DMC, as we will review some of the daily market moves. If you have come to the live daily market commentary, come again. If you have come and you haven't told somebody else about it, why not? Invite a friend. All right, let's get started. So this morning on the ES, we are up 18 points, rallying up, and we broke out above our breakout line from yesterday. So those of you that took this long from yesterday, you have been pleasantly rewarded with a move from 33.55. We got as high as 33.79 in the overnight, but our breakout came last night in the overnight session. And so as we are continuing that march higher, we are seeing that prices are continuing to move. Where we would look next is, where's a decent opportunity for a retracement, knowing that this 33.98 is that all-time high, right? That 33.98 is that all-time high where we would be looking for our resistance point. I think what I'm going to do next is put a little bit of a line at this wick over wick area here, right at the breakout. So if you took the long on the breakout, then you have picked up a fair amount of points and are doing pretty well with that. And then if not, you still have a retest option down here at this little tiny wick over wick right here at the breakout point if we get a pullback. If you're in that long position, I would take your stop and move it up a little bit so that you've locked in a bit of profit. You may want to take some off the table underneath this little area of demand right here, to know that you've got room to run going higher. Now, I will say that on a 15-minute chart, this is actually a pretty clean level right there at the European market open. We could get a bit of a reversal off of this zone. In the Nasdaq, so our Nasdaq level, we had a very strong move away yesterday, right through our confirmation short. Now, remember, that's why we changed it to a confirmation short. We switched it to a confirmation short because we knew that we'd come close to it without getting filled, and that forces us to change the rules. That forcing us to change the rules, price dropped right down into our level, and then we got a very big move away from that zone. Over 120 points on that move away. It was a very, very nice move. Has got as high as 1156. And so now we're selling off just a little bit. So if you took that long and you're still in that position, I would move your stop up to, if you're still in it, I'd move your stop up to right underneath here for the rest of your position. Hopefully you took a little bit of money off the table already. We may get another opportunity to get long somewhere in here, as I'm looking at that one, later today. So keep an eye on this one, although I don't love that for a long on this bit of a pullback. In the Russell, similarly, we had a breakout area here in the Russell as price broke above. We didn't quite get the quality basing necessary for a true breakout. And so, you may or may not have gotten in on that breakout trade. If you did, then you pulled a little bit of coin from that move. And if not, you've got, the origin of that breakout, which is this move here. I actually like the European market open here a bit better for a nice little reversal. Looking at our crude oil and gold markets. Now, crude oil, we are coming up into our supply level. We've come really close to it. We're not quite in as of yet, and we're basing here a little bit in front of the level, which is definitely going to make this for a much weaker trade and not as strong of an area of opportunity. So in looking at that, this then becomes a confirmation entry at this point because of that basing there right in front of the zone. If we break through that area, remember our 4-hour chart still has the potential for price to rally up to 45 and even higher. So just keep that in mind. If we get some quality basing, you could get a little bit of a break through that area. Gold. So let's look at gold. Now, gold, we've been bullish for a really long time, and we're still overall bullish. Our 4-hour chart is definitely giving us, a nice pullback, however. And we've cut right through 2 areas of demand. And both of those areas of demand we cut through pretty easily. Now, I will say this first level, we had basing in front of the level, and basing in front of the level would tell us that we shouldn't be interested in taking that trade anyway. These were both overnight levels that were violated. So if you were asleep and you feel like, oh no, I didn't get into this trade, then no big deal. If you did set these up as a set it and forget it before going to bed here in the U.S., then you definitely got a stop out on at least the first level. The second level actually gave you about a 2-to-1 move away from that zone. Maybe not quite 2-to-1, but you did get a little move away, and then it fell off as well. So with both of those falling off, looking at the 4-hour, my big picture trend, I've gotten lower than this little swing low right here. So technically, if I consider this a swing, which I'm not sure that I would consider this a true swing, then I would have lower swing low, lower swing high. However, I don't know that I consider this a true swing. I think this is, maybe a part of a swing in there. It's one that if I've got to think about it, it's probably not a true swing, right? And so now we have an area of potential support here. Let's see if we base in front of this right at 2,000, right at that 2,000 region, and then drop away. Now, above us, if I go to the 1-hour time period, back to our 1-hour chart, there's this little wick over wick area here, which is going to tempt a lot of traders. I would tell you to be a little cautious of that area. While it's a good time of day, we dropped and then retested right here. So this picture of this wick over wick right here has, because of this long lower wick, shows me that we've already retested that area right here and then price move back, right? Now, can I still use it? Yeah, I can still use it. It's still valid, but I feel like it's less probable, and I'm going to come all the way up to here, which I don't normally go and take a level that's that time of day, although in gold, that's not so bad. All right. Nat gas, we talked about our 6-candle and our stop out yesterday, a 6-candle rule telling us not to stay in that thing. And then our confirmation short blew right through, or confirmation long blew right through. Our limit entry for the long, you may or may not have gotten filled on this. I think it probably missed you by a tick or so, depending on how you drew your lines, because it's literally, a tick away from an entry. So if you didn't have that as a setup, I would now say it's time to remove it. And I'd actually look for a potential breakdown from here soon. So look for basing in here for a potential breakdown. Looking at our copper, we didn't have any levels here for us to really lean on or to talk about. We did come back to the origin of this move. So if you guys had that origin of the move set up, then you've gotten a nice move away from that level. I felt like copper can still get down to this 2.75 region, and I'm actually looking at a place to get long in copper once we get further down, and even going out to like the daily chart we had talked about, potentially a candle-to-candle reversal somewhere in here. We don't have that as of yet because I haven't gotten a candle with a higher high, and I haven't had a reversal candlestick, but I feel like it's just a good opportunity to look into getting long if price pulls back a little bit deeper. But once again, that's why we're talking candle to candle on a swing trade. Soy, so our soy level, a little bit of wick over wick area here. Price came into the level, and then about 6 candles later, it had done nothing. So at this point, we're going to remove this soy level. 6-candle rule told us it's probably not going to be as valid. But I am going to put a line right here for a breakout. And the reason being is that I've got support, broken support, resistance. So if that resistance area breaks with basing in front of it, that's going to be a decent little breakout trade. Corn as well, almost the identical picture. Price came into level 1, 2, 3, 4, 5, 6 candles later. Price had not really done anything. Move your stop to break even. Tells you should probably get out of that position. Oftentimes we see that those 6-candle trades, when they fail, they tend to become breakouts When our 6-candle rule is in effect, they oftentimes become quality breakout positions. Next, moving over to bonds and currencies. In our bonds and currency markets, in the ZN, we did get a little bit of the breakdown trade here. Price gave us a bit of a breakdown right there. We came back up, but not above anywhere near the pivot, and then dropped away, and we've continued to drop away in the overnight. So if you took this one, you're still in this trade. Take your stop, move it down to right about here, where you've got a little bit of resistance support kind of conflagration there at, I don't even know what that word is, at 139.25. I'm going to take, if you miss the entrance, we have a really clean wick over wick right here that I think makes sense for a potential entry point. Remember, your stop would go above the pivot in that case. In the Aussie, so in our Aussie position, we had this little potential area that we were talking about yesterday for a possible breakdown, and we popped right through it without giving me clean basing in front of it. And that's what we talked about. This happened literally in the morning just before we got started. But if you took it, you got a little bit of a pop up, and it came actually just above where your stop out would be. And then it hit this confirmation short, and you got a nice little move away. So both of those levels, this one didn't give us a clean entry. If you took it, maybe you got a little stop out, but this one gave us a very clean entry, and we got a nice move away to our eventual target. Then we got to remove that level because it's no longer usable, and now we still have this breakout here. So I think this breakout is still valid at 71.46 or below there. We poked below there, but I still think, once again, if you get the quality basing, it's still valid. You may or may not have taken this breakdown based upon the amount we didn't really truly get basing in front of that level. We got basing right in here, though, so it was fairly close. I spoke to a couple of members that did take this one, and I spoke to a couple of members that did not. And so it's really, when we define basing, we want basing to be in the way we want to define basing is that it's in the area where we've seen basing in the past. And this one, the basing that we saw was just above or right in there. So it was, I'll call it borderline, right? That's something to consider. And so it really depends on how close you want to look for those basing levels. But just know, if you've got to think about it and you've got to question, is this close enough? It's probably not, is kind of the way that I would like to play it. Now, on a 4-hour chart, our 4-hour is very sideways. And so I'm not really going to do a whole heck of a lot out of that 4-hour chart. In the euro, so on our euro level, we came back to the demand zone. These are actually the lines we drew yesterday. We came back to the demand zone, and oops, that's not the zone I wanted. That's not the line I wanted to remove. Did it again. All right, third time's a charm. Okay, we came back into the demand zone, and we got a little bit of move away in the overnight, and then we came all the way back to the bottom of that demand zone, and we've really popped up nicely out of that level. So you may or may not have gotten in this position due to the basing that we had in front of the level. It was an overnight level, so once again, it really depends on your time of the day and your trading style and your trading time frame. Those of us, those members that are in the UK or Europe or Asia, you certainly are going to be awake to see this, and it did set up for a nice little double bottom pattern. Now, if you missed it and you feel like, okay, I think that there's still a chance for the market to be bullish a little bit, then you've got a little wick over wick area right here, formed right there at the London Open. It's a very tiny wick over wick. I mean, it's minuscule, but it's very small risk as well. Canadian dollar. So in the Canadian dollar, we had our original touch and go off this level. That then converts this to a confirmation short. Well, price came into the level in the overnight and moved away, but not enough to get us halfway into the level, which activates our confirmation trade. And now price blew through that level. So that means that there's no entry on that trade, and you should not have taken any stop out exposure or risk in that position. Once again, very similar area to what we see in the euro is this little wick over wick here. I don't think it's as clean in crude oil as it is in the euro, and so I'd be a little bit more crude oil in Canadian dollar as it is in the euro. So I'd be a little bit more cautious of that as we are kind of coming up. no clean supply up here. Your demand's actually a bit better right here, but this wick right here tells me that this demand area on the 4-hour was retested. So I'm just going to hold off until I get some sort of a basing breakout potential in the Canadian dollar. Great British Pound. So in the Great British Pound, we did get a trade into our confirmation short area. Got a nice little 2-to-1 move away before the market kind of stalled. We came back up to the entrance again and then got another move away. So the level gave us a nice little reward if you took that short before then popping up, and now we are sideways overall on our 4-hour chart. And so I'm going to hold off on really adding more levels. Our breakout still exists above here, but there's no reason to add a whole bunch more levels. And then the Japanese yen. Yesterday we talked about the fact that if we get quality basing down here, you may get a potential breakout. That's why we have this little line here just kind of drawn. I was not sold on it, and there's a reason I wasn't sold on it. We popped right back above. So, if you took a flyer on that, your stop would be way up here anyway, above that pivot. And now it's just kind of gone nowhere. And so once again, I go back to my same, my same stance on the yen, is that until we can get to this area of supply or this area of demand, until we've put in some quality reversal zones, I may not going to be very interested in doing this. So overall, those are our levels for today, as we have many, many levels in many different markets that met entry yesterday. Today, we've got a couple of different areas. The S&P, still up 0.5%. The Nasdaq's not anywhere near as much, and so just keep that in mind as well. So if you guys have any questions, as always, send us an email, support@tradersarmy.com. Remember, tomorrow, live trade room. Don't forget to join us. I'll talk to you soon. See ya.